Hello and welcome to another episode of the Swing Trader Weekly Status Update. It's Justin Nielsen here, and ho, 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 it's Merry Christmas Eve to everyone out there. Happy holidays. I'm Justin Nielsen. I'm going to be your host today. We've got Mike Webster also joining us, as he typically does on a Tuesday. We had an early closing session, so we are bringing this to everyone early so you can get back to making your turkeys, lasagna, whatever your food of choice is. What are you having tonight?
My daughter made some, what are those things called? It's in the husk, it's a Hispanic
Tamales?
thing. Tamales. Yeah,
Oh, okay.
she learned how to make tamales,
Oh,
so
that's right. Okay. Yeah.
yeah, so she has her certificate and everything, like that
Okay.
she's a professional tamale maker, and this is her first time making them. So I'm looking forward to it.
Yeah. Well, hey,
Yeah.
I've had quite the tamale fiesta here myself. My mother-in-law has been. I don't know how many hundreds she made, but yeah, definitely a
Awesome.
lot there. And
Well, I'm looking
I'm
forward to having some of hers too.
yeah.
Maybe we can get Olivia and her to, together and make them.
My mother-in-law did make for the first time vegan tamales for my brother-in-law. So
That's what
yeah.
we're having, gluten-free vegan
Yep.
tamales.
So very
Yeah,
good. Okay,
yeah.
enough about food. I'm getting hungry. We better get into it. Mike, I mean, last time we chatted, it was, we were very heavy, and then a lot has kind of happened in the last week since we had our last swing trader status update. So let's talk a little bit about that. I'm going to bring up the Nasdaq right now, and yeah, we'll pull that up. I'm going to switch some things real quick on my screen.
Sure.
So here we are. Okay, this is NVIDIA, which I do have a position in NVIDIA. Here's the
Me too.
NASDAQ above 20,000. And that was what we were talking about last week. Was like, oh, here we are above 20,000. That's
Mhm.
a good look. We'd like for it to stay there. That's not exactly what happened. We had a Fed day, which again, everyone was expecting a hawkish cut. We got that. Market tanked. Really bad break below the 21-day moving average line. But here we are, three up days in a row, back up above 20,000. Is it kind of game back on?
Yeah, it is, in my opinion, and, I'm gonna call this the Rolling Stones, market. You can't always get what you want, but sometimes you get what you need, and we needed, a brutal shakeout, which what is what we had. You never know in the moment if it's a shakeout or, it's the start of a big correction, and it really could have been a start of a big correction, and you and I last week, we went through all the similar setups in Nasdaq history that had something like that, and you went in your master spreadsheet that we're able to go in and say, okay, when it looks like this. So we said, when we're in the middle of a power trend and our high is above our 21 day, and then you have a bad break, and we define a bad break as either coming down two ATRs, average true ranges, because different time frames are,
Yeah.
are different. So we didn't want to say 1% because 1% in 1979 is totally different than 1% in 1999, So we did it relative to the volatility of the time and looked at the two standard deviation breaks and then the three, because last week it was a three, not standard
Not
deviation,
standard
three,
deviation,
three
ATRs.
ATRs.
Yes.
Sorry, I'm a little tired. So anyways, we had those breaks, and you and I went through all of them, and I've tweeted that out. It's at the top of my my X
And can you remind folks
account.
of your handle if they aren't familiar with that?
It's M Webster 1971.
Mhm.
So my pinned tweet, you can just look there, and it's the spreadsheet that you put together for us. And everyone should go through each one of those and do a change date on the day that is there, because that's the day that would be similar to Wednesday. Then go out in time, and that's what the two of us did, and Chris sat in with us to observe it and look at them together with us. And it told us a story that most of the time you need a lot of time. It goes lower. Besides that original bad break, it would go lower, um, or just go a lot lower, or go a little lower, but put in weeks or months before we get back to new highs. So the fact that we've bounced back so quickly puts it in that rare category, and we have a few examples. And you know what? Might as well just look at those examples right now. Do
I
you
was
have those
just
states?
thinking, yeah, let's kind of go to the tape here.
Yeah.
And let's see, where did
It-
my
So while you're doing that, I'll
oh, there
just
we go.
say that one of the things that we were waiting for was a close back above the 21 day, which we got. Then, more importantly, the low to be back above the 21 day, which is what we got in a major way. The next thing would be to close above the high of the bad break, which was last Wednesday, and then eventually getting a close into new high ground. But you have to do things incrementally, and that's what's
Mhm.
happened. So here's one of the bad breaks. Go ahead.
Yeah, I was just going to say, here's 2017, and just as a reminder, it just so happened that this was after a Trump election, right? Here we had the election in 2016. Trump gets elected. A nice trending market here, supported the 50-day moving average line. Most of 2017 was quite a nice trending market. It was a very long lasting power trend. We went under pressure maybe a few times, but the power trend was one of the longest lasting power trends in history. The longest, actually, I think.
Yeah.
So here we are in the middle. This was a bad break, right? We had
Oh
a
yeah.
day that
Very
was down
similar
two and a
to
half percent.
Yeah, very similar look and feel to what happened last week, where you're incrementally going up. And one thing that we didn't do, just didn't have time to do with your search, was to look at how many days of damage did you have. You kind of get at that with how many ATRs that it came down, but kind of like that old saying, and you said it last week, where you take the stairs up and the elevator down, and I think you said like sometimes the elevator isn't there, you just fall down the shaft. Yeah, that was cracking up when you said that. So I'm stealing that for all of eternity. Just letting you know, I'll give you royalties.
Okay,
Uh,
perfect.
so that really went back like 3 weeks, right? In one day, you were back where you were like 15 or so days before that. So that's another way you can slice it to see how bad that damage is. Now let's go forward and see how this played out.
Okay.
'Cause this was on the rare side where it bounced back quickly. That's
Yeah,
why I think everyone should go and look at all of them.
and I can keep on switching stuff back. Okay, so let's go forward. Here's the 18th. Kind of seemed like, oh, maybe this has stopped. And indeed, within 3 days, you're right back above those highs from the down day, and then it was kind of back off to the races.
Yeah. Yeah. And so then at that point, things change and everything. But this is why you
Then you
don't
say,
want to
what
get
were you worried about?
Exactly. You don't, but if you look at all of the data, because I've seen a lot of people, and especially on Twitter, going, "Oh, like you shouldn't sell when you get hits like that." No, you need to, unless you're like long-term investor. If you're swing trading, you need to be in touch with what the market is actually doing. Lots of times you'll have shakeouts, but you don't know how bad it's going to get. And really, we were fighting the odds. Like, we started going back relatively heavy pretty quickly. But the odds were kind of against us, because I would say we didn't do the math, but I would say, yeah, 70% of the time, just throwing out a number, you need to either deal with a lot more damage or a lot
Right.
more time. And so this is in the rare case of snapping back. But I did think with without getting into the whole thing with Powell, I think Powell messed up last week. I've been very critical of Powell, and then a few months back, I changed my tune because I thought he was doing things exactly right. We don't have 2 hours for me to explain why, but essentially he got into politics and is playing politics instead of the Fed thing, in my opinion, based on what he said and what he didn't say at the press conference. I think that threw people off, and you just need a little bit of time to digest it. Say, okay, this he's playing politics now. That's fine. Now we understand how to deal with Powell going forward, and he'll play politics and be behind the curve as he typically has been with things, and that's fine. It was just a risk event, and I think the market is now digested that. We will see again, we need to get back in this position where we close into new high territory to know that we're totally out of the woods. But as a swing trader, you don't want to wait that long,
Yeah.
right? You want to start getting back exposure, and that's what we did.
And just, just as another scenario out there, there were some examples where you did get to new high ground or just, right up there, and then you came down again. So it was kind of like, that's still a scenario that could play out. So as much as we like the way things are looking right now, and again, keep in mind, we're in 2017 now. So if you just joined us, we're this is not our current market. We're not at highs yet.
To
But
the future.
so, but it's where you've got to kind of, when you're using a precedent, you've got to kind of recognize, when it is following and when it does break. And, also some of the other cases that maybe aren't as pleasant, that can still be in the cards. And again, I mean, one that kind of comes to my mind off the top of my head was that October, the Halloween trick or treat for 2007, where we did see some, some distribution hit. Things were looking like, we were getting a pullback, some pretty ugly days here, and especially with some of the individual stocks. You had, Crocs, earnings that I know you remember, but
Like it was yesterday.
yeah, but by Halloween we were right there breaking out, and then that was kind of it.
Oh yeah, that was people should
And
study
that
that
was the
one.
high for how many years?
A
Because we had the
long,
great
long
financial
time.
crisis happen shortly after that. So you always have to kind of take it, like, okay, this is where we're at now. Here are the scenarios that work out even better. Here are the ones that don't work, and you got to listen to the market at the end of the day. Let's go to another example.
Before you switch
Yeah.
from there, I think the important thing for people to this was such an important time in the market, and we're gonna have Charles Harris on Friday on IBD Live, and he really did well during that recovery phase. Like he just nailed it.
Let's not be modest. I saw your numbers too, Mike. You were no slouch at the end of 2007.
Well, so so he can talk about his time that what he did there and pushing it and being flexible, and we'll hear from him on Friday. And I remember that time like it was yesterday. It was a very important time in the market. People should go back if you didn't trade during that time or it's been a while since you've studied it. Go back and see what you would look at on the chart to make your decisions on how to trade. And I will tell you what I would use would be a combination of upside reversals. If you could point to the most recent upside reversal that you had there, the 2698 right there, an upside reversal that recaptures the 21 day is very powerful, puts a line in the sand, and you want to trade heavy from there. But more importantly, just keeping your low above your 21 day. If you just use that as your major accelerator type of tool, that it'll keep you out of trouble. Because when we came back at this point that you're showing, I mean, you had a major expectation breaker on November 1st of '07, and then you cracked through your 21 day. And you can't just say, okay, well, we just had a crack up through the 21 day 2 weeks ago and we recovered. We're going to recover again. You
Mhm.
wait for that evidence and just go out to the end of '08, just to change the '07 to an '08 for people to see how bad this got.
So
uh,
here's where we were looking.
it is
Actually, I'm
straight
gonna
down, man.
go a little bit further. Yeah. So here's that breakout that we were looking at, and again, it just there was this rally that you could make some money in March,
Hmm.
very short lived, and then it was just disastrous.
And again, during that time frame, your low was above the 21 day for the time where you would have been able to make money, and then after that, it would have been very hard to make money on the long side.
Mhm.
um, so just something to think about. We can go to the next example.
So I think you had a 2016.
Yeah.
So speaking of the election year, we'll go a little bit before the election to September 9th. Another bad break.
Yeah. So again, not as classic as the last one that we were looking at because we had been inching up and then broke. And so it's a little different position, but still you broke through your 21 day, and this one you broke through the 50. So it looks more like what SPY looked like recently. And so at that point, you need to protect yourself because it could have gotten a lot worse. Let's look and see what ended up happening. You can just go out a month because I know that we've kind of gone long on this segment. Yeah, so a quick recovery, you close back above your 21 day at this point, and then a few days later you get your low back above it, and that's kind of your more of your signal that the coast is clear. It doesn't mean that you're not going to fall again later and that you don't have to still pay attention to the 21 day and the 50 day, but at least for that moment in time, the right thing to do would have been to be long, and you're always living in the moment, especially swing trading.
Yeah. Let's go ahead and go back to 1995. This is July. And we're going to go to July 19th and see how this played out.
Yeah, so really bad break there, right? I mean, that would have felt, 3.6%, but look at all those little baby moves up and then that elevator shaft down. And let's see, why don't you go out to like December of that year?
So here's where we're looking, and again, this one started with a break
Yeah.
that just got, accelerated to the downside.
Yeah,
Recovered
so
all
that
the
was a
way.
little different. It had a
Mhm,
little bit of a warning where this one, it,
mhm.
it came out of the blue.
So recovered to highs, then another test of the 21 day, recovered to highs, another test of the 21 day. Certainly didn't make it easy on you.
No.
Yeah.
Yeah. So, anyways, that's why we just wanted to share that with everyone. And again, just go to my Twitter page, Webster 1971. We've got the full list of all of them that Justin provided for us. And I have two standard deviations in one color, and then two
ATRs.
ATRs and three ATRs. So just start with the three ATRs. If you really get into this homework assignment, then move to the two
Yeah.
ATRs as well.
And a reminder, like, and there was an example in 2000 where you were like, hey, the January, basically the beginning of 2000, where you're like, hey, how come this didn't catch it on the three ATRs? This was a really bad day. And to your point, one of the reasons why we use ATRs is because the volatility was so heavy at the end of 99 and early 2000 that you had to basically move almost 10%, I think it was, to
Yeah.
get to the three ATRs. Anything less than that, and it wasn't a bad enough break. Like 10% isn't bad enough. So yeah, that's one of the reasons why the ATR does kind of standardize it a little bit. But everything has its flaws, right?
Yep.
You get, if you're using a factor and saying, oh, triple to ATR in a very volatile time period like that, you get to almost ridiculous numbers, like,
Yeah,
again,
and that's why you
10%.
wanted to do an or statement. Like if you're doing hardcore research, and you're using ATRs, you go, okay, the ATR is X, or
Yeah.
and then you fill in the blank with like, okay, it's at least more than one ATR, and it's this number that's a lot.
Yeah.
5%, 4%, something like that.
And that was one of the problems we ran into when we tried to do follow through days on an ATR basis, because 2009, that follow through day, you would have required what, like a 6% or something like that.
Yeah, it was crazy.
Yeah, a 6% threshold for your follow through day. So again, it's just one of those things to know. It's when you're going with one thing that makes sense in most cases, there could be those outlier cases that you have to be aware of. But let's talk about a little bit fast forward,
Mhm.
because we mentioned January of 2000. One of the things we've been talking about on IBD Live is how Januaries can sometimes be a little rough to start. You can get some pretty dramatic moves as, people that maybe did some tax related maneuvering at the end of the year, do some tax related maneuvering at the beginning of the year as well. So anything that you're looking for kind of heading into the new year, I should mention that this is going to be our last swing trader status update for the year. So we got to kind of project out a little bit. What should be the game plan here for going into the new year until we're back with folks?
Okay, so the other homework assignment I would suggest people do, and I do this every year, is go out to the end of January and just go through the entire market. I'd do it. I'd start with the Nasdaq and go through, at the beginning of our database, and then I would also do it to, with the S&P, because there are times where most of the time they look very similar. Sometimes they look very different. Kind of like now. Look at both of them, and look at the wiggles and wobbles that you get in January. I think the January of 2000 is the easiest one, because that's like, kind of um, similar to what we've got going on, where you get these wild moves in there, but it didn't break the general trend of the
Mm-hmm.
market. And you should expect that. Like Bill O'Neill, the founder of IBD, used to say, if he was going to take a vacation, he would have taken them in January. Now, we both know he never took vacations. So therefore, we never took vacations working with him. But because it wasn't like a time where you want to go to cash or super light, it's just very, very challenging, because you've got the cross currents of all the people that were hedging, because we've had some people on the show talking about how they're hedging right now. So then they're removing hedges, and then the impact that has in the market of, the selling of the puts and everything. You get all these waves of these cross currents that are
Right.
going on. It's like a rip current that ends up going, and you just don't know which way it's going to go, left, right, up, or down. And so just expect a lot of volatility. Those people, I heard some people saying that they were buying puts for, I don't really do much options, but they were hedging using puts out with like a January 3rd
Mm-hmm.
strike date. I would highly suggest against that, because a lot of times your first few days in January will be fine, and then it reverses like what happened here. So if you're going to be hedging, and I'm not a hedging expert, Chris Kessel is, you are, I'm not. I would, go out to February, or at least the end of January, so you're capturing this, because you'd hate to hedge yourself, think you're protected, everything looks good, your hedges expire, and then we get a lot of volatility.
Yeah.
um
And I
so
think, in
yeah, go
fairness,
ahead.
a lot of those folks, the reason why they were choosing January 3rd was they just wanted to push the tax. This was stuff that they had big gains on. They just wanted to push realizing those gains at least until 2025. And so
I
it was
totally get
really
that,
just
yeah.
about protecting themselves through the end of the year. Once the end of the year was done, then they're like, okay, now it doesn't matter. I don't need to be hedged. I just don't want to. I just don't want to risk that gain, and I don't want to sell it and take a tax hit this year instead of pushing it to 2025.
Yeah,
It really kind of, again, with a lot of things, a lot of strategies, it depends on what is your goal. Sometimes your goal is to push it, make money. Sometimes your goal is to protect it, and not lose money. So it really kind of depends on what your goal is. And when you get into tax consequences, that's something that Bill really didn't talk about that much. And so it's a whole nother thing. I never remember him saying, "Oh, we got to do some tax loss harvesting,"
never. But he
putting on
did.
overalls for that or anything. So
Yeah, he did talk. It's a topic for another day. There's a couple times where he was talking taxes, but
very
it
rare.
was very rare. So the other thing I would say for most people who don't hedge, like, because I don't hedge, is you can just dial things back.
Mhm.
Let's say your comfort zone is 100 shares in XYZ stock. Well, you don't have to have 100 shares. You could have 70 shares. You could have 50 shares. Lots of times you don't want to sell, because it's a little bit more of an ego thing. Is like, you don't want to sell and have it go up. But if the end of the year is bothering you at all, or you're concerned about the whipsaws that you might get in January, you can just you can dial things back. There's nothing wrong with that.
Yeah,
Or you could treat it like it's not even important. Like the only people that it's really important to are, one, your taxes, and then two, if you're a professional, where it's kind of your report card.
the
But
year to date number
yeah,
is what your bonus is based on.
yeah, but for non-professionals, it's just another day.
The calendar is the calendar. You know what? Before we get into some of your aggression channel line stuff,
Sure.
let's go through some stocks because it's definitely. I mean, you look at RSP, and while it's great that RSP did participate today, it was up 0.7%. It really is kind of in a weak position, and so it kind of tells you, okay, your average stock on the S&P 500 is weak right now, but there are these areas of strength. We've gone with a very heavy position in FNGG. I'm showing FNGS right now. This is the non-leveraged version. I have a leveraged version of the ETF myself, but I mean this is looking like support of the 21-day moving average line. Kind of like a quick recovery. We got back above the highs of Wednesday. We're kind of right there at closing highs. So very different look from FNGS and RSP. So, before we get into kind of some individual stocks, talk a little bit about how you got to be where the strength is right now, not just where the average is.
Yeah, so I do have a position in the FNGS, and I've been trading that in the G and the U, just different ways for different accounts. So with this one, let's just show them really quickly. Go to the RS and let's change it to RSP. Um, so the RS line, which is the green line, and just go down to symbol, and then put RSP in there. Um, and do it for the RS1 and the RS2 if you don't mind. So
Mhm.
this is something I built for us a long time ago because I wanted to be able to change what the relative strength was measured against, because it's normally measured against the S&P 500 or SPY. Right now we're going to change that RS line to versus the RSP. So let's quickly pull up SPY for a second, because SPY normally has a flat RS line, and this is how you always check to make sure that you've done it the right way. Um, so you can see the this is how you can measure breadth. Another way of looking at breadth is when SPY is increasing, right? That means the market cap weighted is outperforming your average stock. When that RS line is falling, like it did back in July, that's telling you that the reverse, right? That
Wow.
your average stock is doing better than your market cap weighted. So you look at how much stronger the market cap SPY is versus RSP. Now let's pull up um, the FNGS and see how super strong that RS line is. And this is a technique that you can always do in market surge to just kind of compare. And you can do it like, let's say you're trading NVIDIA, which we're both trading, and you want to compare it to the SMH. You can put SMH in there and then see, is it outperforming the group or not? Are you in the leader or the laggard of that particular group? And that's a helpful tool, because sometimes you'll look at it and you just kind of gravitate towards a stock that you know and like, but the reality is it's not the leader, you know. So we've got Nvidia here, and the RS line is still kind of weak. Now let's pull up like a Vago, something I think while I'm trading, I think you're trading it as well,
I am as well. Mhm.
and you can see how different that RS line is. And this is versus its peers, right? Versus SMH. So that's why I built that originally, is to be able to use that. So let's change it back to the Nasdaq, or to the S&P 500, and we can look at other stocks. Sorry, we're going a little bit long, but hey, it's
It's
Christmas Eve,
Christmas.
you know.
Yeah.
It's
Okay, so here we are back on SPY. So again, you can kind of check and flat line. Okay, that means we're against the S&P 500 again.
okay. So what other stocks did we
Oh
want to
yeah,
cover?
let's go to a few of the ones that we put in our roundup. Palantir. So again, kind of a little bit back to heat, right? And I do have a
Mhm.
position in Palantir myself.
Me too.
This is on Swing Trader, and I mean, where was Wednesday? I mean, Wednesday doesn't even show up as much of a day here. I mean, it just looks like a normal day. And just for those that aren't aware, here's Wednesday, the big Fed reaction.
So an important thing for people to do, now that you have an early, day, and then you have some time, maybe tomorrow, or certainly you should do it by this weekend. But I would do it if you have some downtime tomorrow. After all the gifts and everything and food, is to look and see what didn't break their 21 day last Wednesday. So this was showing relative strength in a different way that the market broke badly. Like, let's pull up the cues um, to see how bad that was on Wednesday, and then toggle back to Palantir and just focus on that low versus what the 21 day did. And so anything that was holding up better than the market, you know, was showing, positive divergence or relative strength.
So a lot of people, I'm looking at the YouTube, live stream here, and some people are asking, what was the setup here? What was the, and
High tide
sometimes it's
flag in spirit.
right. So it's sometimes a matter of also what it's not doing, kind of like the fact that it wasn't coming down, the fact that it was holding up so well. It just kind of makes you say, okay, how can I get into this? How can I get into this when something is acting that strong, when the relative strength is so great?
Yeah, so you can make a choice. You can say, okay, this stock really should have been bought, you know, at $25, and you would have been shaken out when it went down to, under 23, and then it came back. It never gave you a perfect entry. Like, if you were
Mhm.
doing a classic, those things that you did with Bill, for the newspaper, where you marked up, you know, the model book stock so nicely, and you did so much of that work by hand of marking those up and directly with Bill. And you would look at this and go, okay, there was no classic entry that would have worked, because out of that cup without handle or consolidation as it's marked, you would have been shaken out for sure. And then it just recovered back up and never gave you a classic entry. So you either just let it go, say there's no classic entry here ever, or you kind of find where's the spirit of something. So let's go back to the daily. You have this rapid advance, which we call a flagpole, and then you go sideways. Now, normally, the orthodox version is, 4 to 8 week flagpole, 100% or more. And then you go sideways and you would say, 20% or less, um, for about 3 weeks or so. And so this doesn't fit that mold, right? Because it doesn't meet any of those criteria exactly, but it's in that spirit. You have this move up from 80 to or 40 to 80 in a short period of time, and then you didn't give back many of those gains. One way, rather than using percentages, is just to see that it didn't even break the 21 day
Right.
after that move. Like, that's very similar to what Taser or Axon did back in the 0304 time frame, or Bethlehem Steel back in 1915, 1916. These run ups, and they're holding in. It's telling you that, remember, it's just a big poker game, and it's the other people are saying, hey, they really like their hand, they've got aces, and they want to hold on to it. Doesn't mean it's going to work out, but they're not letting that go. They're staying in the pot, you're raising or whatever, and they're staying, they're calling there, because they think it's going to go a lot higher. Because not too long ago, this was a $20 stock and people didn't really want it. Now it's an
Mhm.
$80 stock and everyone wants it. Something is different.
Yeah.
So you pay attention. Now, did I like the action today? No. It felt stalling. Like, it really felt like it should have moved more. Same thing with
Yeah.
Nvidia.
Yeah.
Let's go back to Nvidia. This bothered me, and I'm trading it, and we have it on Swing Trader, but we reduced the position size today because this was going through a key level, the 50-day, recovering through it. It was a shakeout +3 using the 131.80 level, and using 5%, so it undercut that, and then recovered more than 5% from there. And that's a legitimate um, entry. On top of that, it was recovering through the 50-day. So my expectation was for this to be closer to 150 than 140, and it closed just under 140. So then you back away because it's breaking your expectations, but it's not broken. Didn't come down enough to sell the whole thing, but enough to say, you know what, I don't want my capital at risk there. The RS line is still on the weak side. So if this can't get going with the low above the 50-day, in a short period of time, we'll just move on and just wait, and put that money elsewhere, or just keep it as cash, one
Yeah.
of the two. So you're always keeping an open mind. Same thing with Palantir. I wasn't happy that it stalled there. And what was the other stock we wanted to talk about?
Another one was Google, and again,
Okay,
this just kind of goes back to the, mega caps is where it's at. I do have a position in
me too.
Google. Nice reversal, and you mentioned upside reversals are the things to kind of be on the lookout for. And after the reversal, does it follow up? Right? Does it kind of give you
Yeah.
that feedback? Hey, you did the right thing, and the way you know that is it goes up, right?
Yeah. So look at this one was only up 0.8% today, but it closed near the highs and it was a tiny little spread and it looked normal and natural versus the Palantir that was up 2% if we toggle back to that, but closed off its highs. So just being, I own both of them, and we have both of them on Swing Trader, just being objective about it, Google handled itself much better today than Palantir did.
Mhm.
That's stalling action, you know, not enough to sell it, but whereas Google looks like it wants to uh, reach 200 in a short period of time. If it doesn't, then we'd probably back away from that.
Yeah.
So that's how you're looking. That's why we want to do this every Tuesday. Is just share with us, share with everyone, how we look at things. What's in a nutshell, it's what's normal and natural and what's not, and that's our job is to observe.
Mhm. And then one more stock to kind of talk about that is on the swing trader right now, and we do have a lot. So again, for those of you
Yeah,
that aren't on the product, don't think that this is all we've got. We've got uh, a lot of names on there right now. We're pretty heavily invested, as you mentioned. We ramped up pretty quickly after selling. We said this. We sold more than we wanted to, really.
yeah,
And so we ramped back pretty quickly as things started to improve. But Bros, Dutch Brothers here, this was a tough one. This almost got tossed yesterday because
yeah,
there were a lot of things that is like, would there be a better place for our money right now? It got added on this Friday, which was a good look for it. Good that it was holding the 21-day moving average line, but on a day where a lot of things were up, Bros wasn't participating. The only saving grace was kind of where it closed at the end of the day. And then hey, we got a 3% update today, which helped a lot. But anything else that you want to kind of bring up
yeah.
about this one?
Yeah, I do have a position in this. Let's go to
Yes,
the
I have a
week.
position in this one as well.
Let's go to a weekly. What I really like about it is it reminds me of In and Out,
Hmm.
the restaurant on the West Coast, or through the middle of the country now, where people who love In and Out love In and Out, like myself, and they're very efficient. Like Dutch Bros is, if you've ever been to one, they typically have two lines. It's a very small building, so like all these little like kind of Peter Lynch things from a fundamental standpoint make a lot of sense. But we did have that bad earnings report 2 earnings ago, and then we had to back out. Like you had to just say, okay, this is in the penalty box till it can recover. The last earnings it recovered in a big way, so now it's in a high type flag slash. Um, let's go back to the daily, kind of a shelf, an elf on the shelf type of position, going in sideways, holding the 21 day, not as tight as I would like it to be. And yesterday, yeah, it was on the brink of getting kicked out. If it would have gone a little bit lower or would have closed, underneath the 21 day, we would have kicked it out. Really wasn't expecting today's move to be as strong as it was. I was happily surprised, but it was like I was saying, this is a source of funds
Hmm.
yesterday. That's why you're just flexible. So now we want it to stay above today's low, and that would be normal and natural for it to advance. And if it doesn't, we might back away from it and wait to get it again at a different time. But even though we're swing trading and doing things short term, it does help if you have kind of a fundamental understanding of what you're dealing with, and you'll treat it a little bit, treat it a little differently. I would treat Bros differently than just some run of the mill stock, just like what we tried with Kava. We had tried that and tried to give it you know, um, every bit of room to like recover, and it just didn't recover. And so we gotta, you know, wait for that one.
Yeah.
That one broke the
Um,
50-day, and it's in the penalty box until it's not, until it gets back above the 50-day, for sure.
yeah. So I know we are going a little bit long, but did you want to kind of do a quick
Yeah, I'll
kind
just
of
share them real
recap
quick.
of the regression channel
Yeah,
line? So I'm going to go ahead and stop sharing
sure.
and let you take over. And just as a reminder for folks, we do a much more in depth on Fridays here for the regression channel lines, but we've been showing it just because it's been at a important inflection point here lately for just kind of helping us gauge how hard to kind of go. How much do we want to push down on the gas pedal? And as a reminder, we've got that white dashed line that is the regression channel line itself, kind of a best fit line through a period. And in this case, we're choosing the August 5th low, and we're going 50 days out to October 14th. So we want to get that 50 days in there. And then once we kind of have that, we stop so that we're not continually data fitting the trend, because it can start getting a little wild and wide to accommodate, because it's always going to be trying to do that best fit line through things. Of course, we've got our solid lines. We've got the red on top, which is a 1 standard deviation. We got the green on the bottom, which is also a 1 standard deviation away from that white line. And then we got the red dashed line, which is a half a standard deviation above the regression channel, and the green dashed line is 0.75 standard deviations. And again, we're talking standard deviations now, not ATRs. This is looking at all of those days and saying, okay, where is, how much does it vary here, and using that. So Mike, we came down to this green solid line, and the NASDAQ just stopped exactly where you would want it to and
Hmm.
bounced.
Yeah, it's crazy, right? How this works, and I'm just so into the regressions these days, and I've talked about it in the past. I've been using them since the '90s, but was just doing just one or two things wrong, and I've since fixed those, and it's still a moving thing. I'm actively researching on it, but it is really, really powerful, and the concept is, forget all the jargon, is just when you come down. Down near the bottom or underneath the bottom of the green line, and you start moving back up really around the dashed green line, the market wants to mean revert, wants to go back to home base or that white line, and it wants to do it quickly. And that's exactly what we had happen now. So now we're more in a neutral with a positive bias right now, because we've made it all the way back up to the white line, the regression line, and now it wants to move up a little bit higher than where it was last time. So our goal would be, if this is normal and natural, for this to get up into this area in a short period of time. And after the fear that we had last week, you would think, oh no, that can't happen. But that would actually be normal and natural. And you can kind of see where it did it over here during the election, went back up here, then it ran out of gas and it had to come back and test it. But you don't hold these things forever. So SPY broke and needs a new regression. Let's go to the SPY one that it did it here in November and went up to the white line, came down, and then when it was supposed to get up to the white dash line here in late November, early December, it just couldn't, and so it was weaker. But then on the 18th, when it broke badly below that and then stayed below it for a couple days, we're now saying this earlier trend that started back on August 5th is now dead on SPY. We need we need a new one. So we're throwing that one out. And then let's just look at the Qs real quick. The Qs are a little bit weaker than what the Nasdaq was. It's not up to your white line here. I am trading the Qs. And so the assumption is that it wants to get up there and then back up to the red dash line. But let's just compare that to what happened with RSP. Oops, doesn't want to do RSP for me. So here is RSP, and that broke out of it. Really, that trend changed on October 31st, where you
Mhm.
were back below it and you never got back into that trend. It was starting to establish a new trend over here, and it broke down from there. So just because one thing is good doesn't mean everything is good. And that's all I really had to share. on there. And I know we've gone super long, but that's what we do around here.
Right. Well, and you know what? I also want to just give a shout out to the folks that are watching this live. We've got a few hundred people watching this live, and it's on Christmas Eve. So while we did have the market close early, I just got to say I appreciate the dedication that is out there. That people are like really interested in getting better and learning about swing trading and kind of getting our thoughts on things. And so I just really appreciate the fact that people, are showing up on Christmas Eve to do this. And
What
I
else
think
would
it's
they be
great.
doing?
Right. Well, look, folks, the market's closed now. Time to start, focusing on dinner and, spending time with the family. You've got the homework from Webby. So again, and for those of you that are watching, even over the holiday, I salute you. But make sure you're getting in that time with your family and all of that, because hey, a lot of this stuff can wait. We'll be here, and again, we're not going to be here next week because we've got a number of us that are out. So for New Year's Eve, since that one is going a little bit later into the day, we're gonna have a break there, but we will be back at the beginning of the year, starting as we always do on Tuesdays, about an hour after the close. We'll
Maybe
try and get that.
earlier if I can get it done. If
Yeah,
we if we
we'll
can
try
do
and
it,
get that
I'm gonna
earlier,
try
but
it.
we have the SMT
Yeah.
video, so we've got to figure that out. But I wish everyone a happy holiday, a great new year. Stay safe out there. Be kind to people, because you never know what they're going through, and the stress that they might be under the holidays. So just remember, kindness is free. So any closing thoughts there, Mike?
Wow, you said everything I wanted to say. Just Merry Christmas to everyone, and if you don't celebrate Christmas, Happy Holidays or whatever you celebrate, or if you don't celebrate anything, just it's a good
Enjoy the day
time.
off.
Yeah, it's a good time to really reflect on life, and it's
Yeah.
what you can do better, and just make 2025 a better year for you all around, not just trading, just as a person.
Yeah, absolutely. Well, thanks a lot, Mike. I hope you have a great holiday. Nice to have
You
you in
too.
our time zone. One of these times we're gonna have to get together, like in
Yeah,
person, just for fun. So,
yeah, would be
uh,
fun.
yeah, hope you have a good holiday. Okay, and that's going to wrap it up for us this week. Thank you again so much for everyone watching. We'll see you in the new year. Take care now.